The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 27th day of November, almost wrapping up November. I hope everyone had a good long weekend, great Thanksgiving. Thank you to our hosts earlier on, and hopefully we can keep up that high standard. We're looking at the Dow up 32 at 23,590. Actually, let me do this one at a time because this is the beginning of the week. It's the last week of November. There's a lot to be looking at, and we'll do this slow. This is the futures I've got in front of me. Down 25 cents. Had a leg C in the weekly chart. The MACD, the moving daily chart right here on the left. MACD is just trying to cross positive. The stochastic is good at 88%. Not great, but very good at 88%. The on-balance volume is not confirming the rally, but price is price, and it's gone to a new all-time high today. That implies that in the Chapman wave methodology, the soonest we can make a peak D will be to have a down close tomorrow, a lower high bar tomorrow. That makes peak C, a new leg up to a new high for leg D on Wednesday, and then down on Thursday. That's the soonest. We'll talk about what kind of pullback, what's related to all the context that we're in right now. Fed speak coming up. You've got tax coming up. You've got a bunch of things. You've got, funding coming up the following week. So we're looking at the weekly chart. See the way the weekly chart of the E-mini has walked the 9-period exponential moving average. It's been extremely positive. We're in leg F/C right now. The MACD is good. Stochastic is very strong at 94%, a little lower than it was last week, but so far, this is just the start of the week. The relative strength index is good. On-balance volume has turned down quite sharply, so we're going to have to watch this closely. What I'd say to subscribers this morning is that this trend line resistance right here suggests that the I keep saying three, it's the 2,600, these numbers have changed so quickly. 2606 to 2609 would be very strong trend line resistance over the next 2 days. And the support would be in the 2595s, 93s. Now, if we're looking at the, let me see if there's a question here. Professor, on the daily, why not use a conservative F/C count? One of the reasons is that the strength of the stochastic at 88% and the fact that the fast-moving average of the MACD is running strongly. I want to give the benefit of the doubt right now, and that's just the way it is, and it goes together with a number of things. I'll talk about it as we move on. And if there was a pullback to the 25.95 level today or tomorrow, then I'm going to have to say, okay, maybe it is an F/C. But so far, everything about it is that really was the peak D and a Chapman wave 5. We've come down very sharply from the 25.94s to the 25.55s. And this is a brand new rally. That's the reason why. And in the 120-minute bar, we've made that peak D. There's that trend line that I was looking at. We hit that resistance exactly. We're pulling back. The MACD is flat to a little bit negative. Stochastic is negative at 65%. So a little too much enthusiasm, I guess, from early this morning. But let's see how that works out. Now, the Dow. The Dow is up 26 at 23,585. It hit 23,600. What was the high today? 23, I think it was 638. Yep, 638 for a leg E. Okay, so now this is the question, and this is what I've been toying with all the time. One of the reasons why we went long, we switched from the short position to a small short position to a small long position, is that I called this a gray A. I did call that a D, but that's because in the Dow, the MACD did not even start to cross positive, and the stochastic was quite good at 79%. Now it's at 80%. Here I am going to call this an E/C. My preference right now is to say it's probably a C and a 23,638, slightly higher high. So far, this is good action. Not great, but good action. Certainly better than I expected. I expected a pullback of about 30 to 40 points and then a rally, modest rally. So the rally was almost immediate and quite good. So the up channel of the Dow weekly chart shows you we're in the inside track. This is that repellent zone. I'm going to be talking about all these techniques, discussing them in detail, and also outlining how you can use all these different techniques to trade shorter term, longer term, and medium term, as well as, of course, long term, in my webinar coming up a week from Friday, December the 8th. And there's just a bunch of bonuses. You get my CD introducing the Chapman Wave methodology, just a lot of things, plus my newsletter for a month. And if you are a subscriber, that becomes an extra month that you get. So weekly chart leg D, monthly chart leg E, and we've got in the 120-minute charts the 2 counts. Either it's a D or an E, so there is a time for a pullback now in the 120-minute chart. SPX.X, that's the S&P 500, gone to a leg E today, a new high at 2606.41, and then here again, is this an E or is this a brand new B? All I can say is that the technicals were strong enough to say there is a good chance that we've just begun a new buy mode. Somehow or other, we will get to that leg D over the week. I don't know, it's going to be a tough call if there's a sudden negative stance in the tax situation, because that could quite easily drop the market 150, 250 points in a couple of hours. So everything about the weekly chart and monthly chart in the S&P is very strong. The QQQ down 14 cents at 156.14 after making a new high. Little doji candle so far, but the day's barely begun. And here again, I've got an alternate count. Is this a D or is it a brand new B? As I was doing them over the weekend, I thought I was going to give the benefit of the doubt to a couple and not to others. It doesn't work that way. Just on a very strict basis, the stochastic is at 94%. That is good. The MACD is cross positive. That is good. I really have to put this as a D/B to say that there is an alternate count. But really what I'm looking at here is the 9-period moving average has been so strong as support. The price has been moving above it. We're close to some kind of a pullback, but so far the price is held very well, and that really is the arbiter of the trend. Not only that, the IWM, no matter how you count it, that spiked to a new all-time high on Wednesday, Thursday, Friday. Yeah, last week at 151.77. That's going to be a tell of a very serious importance, because the weekly chart, I went through this so many times, there's no other way I can count it, but it looks to me like that's a B. If that's a B, then we can't get a really major time and price pullback for quite a while. But we could get a shorter term, very sharp pullback. So I'm watching this very closely, but the IWM was not leading the way for a long time. Suddenly started to lead the way, and even now it's still pretty darn good action with the MACD very strong, stochastic at 89% in the daily chart. That's the Russell 2000. Let's just jump quickly to gold. Gold right now is trading up 8 at 1295.5. So 8 like that. Surprise. I forgot to look at it before. I was looking at the GDX, which moved up quite nicely. Hey, this is good action in gold. Let's just see what the GDX is doing. Wow, it's struggling at 23. Up 18 cents. I have to tell you, I'll talk about it when we get back, because this is a divergence that is worth noting, and I'll be right back. 1027, Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're back. I need to correct this, and we got some great Chapman waivers in the den. Correct me whenever I make a mistake. I did a little too quickly. The S&P, I did see it, but I then forgot to count it. It is an E/C in the S&P. It's same as the Dow. So I needed to have. I want things to line up. Otherwise, it's going to be a little confusing. So let's go back to gold. This is a very nice moving gold. It's gone to. I'm calling this an F/B. It's another one of those alternate counts. I'm calling it an F. It needs to prove itself because it can still go to a G. It's a little unusual coming off a bottom, going to an E, pulling back, and then to an F/B. Unless you have started a brand new count, and the MACD has got such a move that it says that this is something to keep in mind because the stochastic's very poor. On-balance volume's good. MACD is good, but it's one big move. So that just says I usually like to go to G, and then there's a very sharp pullback when the MACD is like this. We'll see. But there's no need to have an alternate count now because it's still moving higher. And it's that weekly chart that really is the one that says if there is a push in gold, and I'm making it quite clear, at least to myself I'm making it quite clear, and it closes above that high that was made on the 16th of October, 1308.4, I have to consider that gold is now in play and that the dollar, which I thought would, over a period of time after a consolidation, would start to move back higher, will be failing and making another arch formation. So we are still long for subscribers. We've got the exact day of the low, 8th of September. It made double bottomed at 91 in the 91s. Last did that in May of 2015. Comes back to September of 2017. Huge arch formation, having gone to the 103 level. And now what we're looking at is this bounce going to be part of a little H pattern, or is it going to start to stabilize and then try to attempt in the monthly chart to get above 95? 94, 90s, get into the 95s. We'll see. Just have to let it play out for a couple of days because there's just so much information that's coming to us. That's why I think now the upside's a little bit limited as we're on in a holding pattern. So I wanted to show you that. Let's look at silver. Silver is, again, not performing. I think that that's a catalyst for telling me that the upside momentum cannot get going until silver already climbs in the 17.40s, and it's at 17.05 right now. I think you need the two to go together. Not only that, the GDX, which is the gold miners, should really be at 23.63 from the action that we've seen over the last couple of days. It's not. So let's deal with that. Go back to the dollar just for a moment. See, the dollar's got left side, right side price time match. It went under it, and it hasn't yet closed below it. Let me give you the exact number. On the 92.75 was the low on the 13th of October, and then 92.75 low was taken out on the 24th. It went to 92.68, but closed at 92.76. That was on Friday. Today, it goes under it, and so far is at 92.78. If it can close above, but you have to have the stochastic and MACD start to turn up. If they remain negative, this thing's just going lower. So that's it, and we've got our stop in place. So at least we're making a profit. It was a lot better profit before, but hey, that's the way it is. We'll have to deal with that. So now I want you to show you the TLT. The TLT, which is the iShares 20-year Treasury Bond ETF, trading at 126.78, just down 2 cents. It looks to me, the way I've had it counted, there's no other count. I'm calling this a peak B on the 21st at 127.29. It should go to 127.40, no, 127.30 for a leg C. We'll see what happens. And that's suggesting that the yields are going to be an issue. And I discussed that the other day. Let me just show you this soft W formation that I mentioned to subscribers over the weekend when I sent out all my charts. One of the things that we're really looking at here is that that monthly candle is going to look really good if it's able to get to 128.40s, and preferably by in November, because then it's just a hop, skip, and a jump to go to a leg D in the monthly chart, which is at a peak C. So parameters to watch. The 126.10 level is key support short term, and 127.30 breaks to the upside in the leg C. Now, if you look at crude oil, it's had a spectacular move. It's broken above the cup formation, and that was the high that was made on the 8th of November at 58.11. It pulls back just a little bit, pulls down to the 55 round number low. This is a continuous contract, makes a new recovery high last week on Friday. The short session goes to 59.05, pulls back a little bit today, down $1 at 57.94. I'm watching this very closely because the weekly chart is in leg E. This is what I was talking about, the same pattern we were looking at gold. There's no need to have an alternate count now because the MACD fast-moving average, the differential, 9-period differential, is still climbing. It hasn't had any bumps down to the red line, the slow-moving average. So this says to me, yeah, there could even be an F and a G, and then you have to recount it. But remember the pattern that we were looking at, the lowercase h that goes to a lowercase m. You see the monthly chart? And then the whole thing becomes a very big cup formation if there's a break to the upside. Well, what's happened is that peak A that was made back on June of 2016 at 60.29, that's going to be the challenge because patterns repeat over and over and over. If you look at the USD, the euro-dollar currency pair, you remember lowercase h goes to a lowercase m, and then it starts a huge move in a cup formation like that. Oh, I don't like it when I've got so many charts. Let me change the color here. Let me just make this a different color. I'll make this, just for argument's sake, I'm going to make this green. Whoops, I'm making it green. Can I get that? Yep, green. I'm making this green, just so that we don't have overlapping patterns that make it confusing. That's one pattern, this is the other. And that's exactly what happened with the euro. Now the euro, I'd said, watch that 9-period moving average of 1.154. Well, it actually held it. I'm surprised it actually held it so nicely and then sprang to a leg C in the daily. That should go to a D, but here we are in the cup formation of the weekly chart in the euro, and it's at 1.1918, down just a tad. So far, this is very good action. Certainly looking at that monthly chart, I would say that's a much stronger pattern than the dollar pattern. USD JPY, this is Japanese yen, dollar Japanese yen making a new low, and that's not a good sign for the dollar or for the yen. So euro is at 110.92, It's pulling back very sharply here, and the MACD and stochastic haven't found support. What am I missing? Copper. I agree. Copper, yeah, we are starting the week with a full recap of all these different things. Copper had a nice bounce, having a pullback today. What we're looking at, and that's going to be very important, is within the context of the weekly chart, holding the 9-period moving average support at 3.09, so far it's doing a good job. So copper's holding okay, and that's going to be very important for the overall spectrum. We'll be, British pound, you want to look at British pound and see if I've got that all still notated. British pound, gone to leg A, B, C, D, leg E in the daily. Nice roundabout U-shaped pattern in the, cup formation in the weekly chart at 1.334. It's up just a tad. Yeah, it could just start to stall a little bit here, but the technicals are very good. Basil Chapman will be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back. So what we're looking at here is this is a 10-minute chart. It went to a peak E from the low that was made back at 20 past 9 on the 26th. It ran up. I'm trying to think, 26 must have been last night. Not last night. It ran A, B, C, D, E, pulls back, has a right arm extension or rogue wave spike to the 2605.50, 2604.50 level, peak F, pulls back, and then has another cup formation and goes to a G/C. Now there I was thinking, that's a G. Everything about it says that there's a little triple top. I haven't got it on this particular chart. Another one I did, I had this as a rising trend line, which matched all the different trend line resistances, pulls back from the 2606.50 level, comes right down to the support, left side, right side price support right there, breaks it by 2 bars, and it goes to 25.97.75. Now it's bouncing again. So just watch closely. Above 2602.50 could be very good for the E-minis, and below 25.97.50 says, oops, got to be careful because we're going even lower. My thinking here is this is so news related, it's really difficult to do anything other than to give you shorter term parameters, because at any point you could have good news, bad news, good news, bad news, and all of a sudden the market's going up, then it stalls, and it goes down. It's what I call dartfish day. Quick moves that suddenly stall. And then nothing really happens over a period of time. You're kind of back where you started. So question about XLF. XLF trying to rally. It's fading. I've got nothing yet. We took our profits in Bank of America, 10%, and now we're just holding back. We're waiting for a pullback, and the XLF is down 0.1. This is the S&P Select Financial Spider Fund trading 26.21. So Goldman Sachs was the next question. Goldman Sachs, we've got Goldman Sachs acting very poorly, down 85 cents, $235.10. I suspect Goldman is going to be the big clue for the XLF, and until it finds really key support, and we're going to be watching the 23.3. So there's 233. It's at 235 right now. 233 to 231 area over the next 2 days. If it breaks that, that's not going to be good at all, because what it'll say is it needs more time and price to come down. But I think on the next big move up, I would not be surprised if Goldman Sachs is a participant. We'll see. So in the meantime, so there was that. JP Morgan right now. JP Morgan is, let me quickly look around here. Yep, all of them are having this lowercase h pattern that says a pullback of about another, of about 1% or more. Says it could go down deeper to test the lows that were made last week or the week before. So be careful. Next question I had was USO. I think I did that, but USO right now trading at 1162. Yes, this could be an alternate count, and I don't want to get too involved in alternate counts. I'd rather say I'm going to call this a B for now. It's an E in the daily, E in the weekly. It's that pattern that I'm looking at the monthly that says there should be a break out to the upside at some point. So what I'm going to say is USO, if you are long, I believe Bob said he's long, has calls on it. I'm looking at over the next 2 days, if there's a spike above 1179 was the high on Friday. Today's high is 1166. If there's a spike above 1183, I'd be very confident to say this is probably a leg C and it's going higher. If there's a breakdown for whatever reason, it's 1163 down 16 cents right now. If there's a break below 1120, a close below 1120, I have to say, you know what? I have to go with an alternate count. Maybe that's a G. But I don't need it right now. The MACD in the weekly chart is really strong. Stochastic's really strong. I'm just leaving it at that. Question I had about OIH. OIH, which is the Oil Service Market Vectors ETF. Where is it? Right here. It's at 23.81 down 42 cents. Now, there's a pattern that I've got to be a little careful of. This says that the lowercase h pattern is active. And that's what I mean. That if it pulls back a little too deep, then it's probably going to test the left side low. Under 23.59, this could go even deeper to the downside. Weekly chart has the lowercase h that looks like a lowercase m pattern, so that's going to be very negative if it goes down. It needs 24.85 to 25.07, somewhere around there, to say, whoa, that's really good action. It's going to go retest the 200-period moving average, daily moving average of 26.03. I just don't see it yet. Maybe it works out. I just don't see it. Next question I had was WFT. Have I still got that notated? Wasn't that Weatherford? Yep, Weatherford. Yeah, you see, this is the same sort of, weather. Don't touch it. Not yet. Give it a few days. Let's look at it again. Weatherford trading down 19 cents at 329. No, this is one of the weaker ones in so far a weak section. Next question I had was QQQ weekly. So what was the question? E/C, short or go long or wait. You have alternate wave count. You know, I have an alternate wave count. It is also in Chapman Wave 5 in the Chapman Wave methodology in the weekly chart. That's what we're looking at. I'm going to say I'm getting very close to seeing enough technicals for a short-term trade on the short side, but I just cannot do that right now. Not when you've got news out there that, I mean, I don't want to be in a position that says, I'm in a position that technically says everything about it should do one thing, and then suddenly there's a news event which is current that could come out at any time and just spike it either way. I'm going to tell my subscribers exactly what I want them to do starting tomorrow based on news. And the chart patterns are saying, I mean, look at even the SMHs. Look at SMH right now, trading down $1.39, 104.38, made an all-time high of 105.83. A peak D, was that an extra one? Let's see, 105.83. Yeah, double top times 2. That's even more potent. But I don't want to be shorting. I was talking to my friend, the semiconductor guy. We were playing tennis yesterday. And I said, you know, what would you be looking at? Not what's being said. You know, all these companies are coming out with the big projections. They kind of missed them last year, but now they've got these projections looking at 10, 15, 20% ahead. And I'm saying, no. What would you be looking for in the semiconductor index that would be your biggest criterion in saying, uh-oh, now we could start to see a slowdown? And he said, it really depends on the orders. And that's one of the things. But he's starting to work on different ways of thinking it through based on his experience. And he said to me, you know, experience is really what counts a lot, because everything you're looking at right now is really very, very strong. And I have to do my analysis. My analysis says I'm starting to get that feeling that I must be a little cautious, but the technicals are still pretty darn good. So here I am. I'm looking at the chart. I'm saying, you know, I'm starting to see a slowdown in the price. It's getting harder and harder for it just to go straight up. It's starting to go sideways. The semiconductor index down at $1.37. And as a result, excuse me, it's going to be price that tells me which direction we go in. Now,
hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So a couple of things I want you to talk about, because this is what we'll be going through in that really intensive webinar. It's called the Master Trader Series, but really, this is not a case for Master Trader. This is a case for pattern recognition, trying to organize your thoughts so that you're able to start a position, add to the position, or maybe start a bigger position and then take something off. How do you control your risk, etc.? And I'm really looking forward to it, because it's going to take in so many of the Chapman wave techniques that are actually current. For instance, look here, Square. I was asked about Square and Baba. We'll look at XLK in a moment. Look, so Square Inc. point of sale software to mining receipts, MNG receipts. Managing receipts. Leg D in the monthly chart came out as an IPO back in 2015 in the 10s, trading now at 43.80, down 5. So what we're looking at is a peak E in the weekly chart, getting a little bit overbought. The leg D with the doji, look at this, it makes a high of 49.55 on the 22nd. On the 24th, it goes to 49.56. So that's a 2-bar. This could be a 2-bar reversal, penny higher. Doji leg D pulls back sharply today. MACD is turning down, but still very strong. Stochastics at 91%, still very strong. Where will it find support? What kind of support does it have? And will it rebound back over that level to get to the 50s? Big question. But you've already met D daily, E weekly, D monthly. So now it says this is a kind of a riskier area. Look, the unbalanced volume just turned down sharply. So that's what we're going to be discussing. What do you have? What are you looking at? Why did we look at it? Where are your entry points? How are you going to use the stochastic and the MACD for the entry and for the turn down? For instance, we have a stock right now in a leg D. And look what it did. It did from the low bar. This is Carbonite Inc. Security Software. Makes it spike to a round number 27 high on the 3rd of November, D. And then it pulls back huge, goes from 27 to 21.35 on the 9th of September. So it turns around, we went along, and now we're looking at, we went to the D. Now it's gotten to the D. There's a little channel that I had already drawn. It's gone to that channel. Let me just make that a little higher. There are. And now what we're looking at is, what do you do at the D? And now what we're looking at is, you've still got this very strong spike in the weekly chart. I have a whole bunch of rules that say, what do you have? What happens in a long wick, a shadow like this? How can you trade it? What are you looking at? So here we are. We're in leg D. It's had a nice move up, but what do we do now? I mean, the stochastic's good, MACD's good. What is this market independent? Is this under the radar? Those are the things that I discussed with subscribers. The reason why we got in, and so now we're at D. What are you going to do? Look at the way we got into the dollar. The same thing. It was a different pattern. It was the huge arch formation from the week of May the 6th of 2016. I said 15. I mean 16. It goes all the way from 91.92 to a high of 103.82 peak G on the 6th of January. Look, there's that MACD. Remember I was talking about the MACD. If the fast-moving average is still very strong, that usually takes you to a G. Yeah, you made the G, and then it came all the way back in exact. There's what I call the plumb line, the midpoint line. I love when it's mathematical. Sometimes you have to use a different technique, but I love when it's the plumb line. Plumb line says you've got until the week of the 8th of September to come all the way back down if you're going to make an equal number of bars up to the equal number of bars down. This is the Chapman wave inside wedge. I'll be teaching about that. And boom, you go right to the exact week, 70 weeks, 35 up, 35 down, and it goes to 91.01 the week of the 8th of September. That's why we went long, had a really nice move from 91s to the 95s. And now what we're looking at is giving back. Now the question is, how do we handle this trade? So we've put in a stop that gives us a gain, but at the same time, we're going to be watching it very closely. So those are things that we're going to discuss. Also, within the context of this peak C1, C2, that's a technique that I'll be showing. This is that pattern that I said could be a double top. This is exact, 95.15 to on the, I think it was the 3rd of November to the 7th, goes 95.15. That's a peak C1, C2, double top, could have been a D, MACD, stochastic, all indicated that should be some kind of a top. It was a top. Now what we've done, we pulled back from 95.15 to today's low of 92.50. And now we're trading at 92.80 in the dollar. The dollar is getting real close to at least attempting, based on the 120-minute chart, how that it should try to rally here. We'll see what happens. And that's the other thing. I'm going to talk about time frames, how to use the daily, and then how to use the 120-minute chart for an entry, then the daily, and then the weekly and the monthly. So those are things that are going to be very, very important. And how important are peak Ds? Look at that peak D in the monthly. Boom, 103.82 goes all the way down to 91. So those are very important. I'm really looking forward to it because it's a while since I've done one of these. I love them. People who have been to them know that I follow up, I lead into it, I give you information beforehand to look at it, be prepared, and then coming out of it, you'll be followed. You ask questions, I send them back with the charts, etc. So this is check on the front page of TFNN right here. Let me see if I can get to it. TFN. Oh, of course you've got your Tiger dollars as well. This is a real bargain because you're going to get a whole day of, I think I'm not sure yet, I'm starting at 8:30, I believe, finish at about 4:30 or 5. Yeah, Chapman Wave Master Trader Series, December the 8th. Basil will be hosting a live all-day class online December the 8th from 9 a.m. until 4:30 p.m. teaching his entire training system. Well, it'll be as much as I can because you're going to be the boss. You're going to ask me what you'd like to do, what you've understood, what you haven't, and I'm going to just go over and over and over until you're absolutely comfortable with those techniques. And even more important, this is the period of the fantastic. Where did it go? This is the Salvation Army. You give to the Salvation Army when you sign up, when you get Tiger dollars. Fantastic deal on Tiger dollars. Let's get back to the nitty gritties here. Question I had was XLK. Look at this chart. This is the S&P Select Spider Tech Fund. Is this a brand new C? Was that a G? I think everything about it said G. I'm going to do this. I'm putting a down arrow right there. I'm putting an up arrow right here. Could be wrong, and we'll deal with it. But in the meantime, this is just about to cross positive, trying to. The stochastic is at 92%. That's good. I'm calling this A, calling this B, calling this C. We'll see whether or not all of these are going to work out. Now look, the weekly chart is alternate count, A, B. So what do we have here? I'll do this in a second. Let me just clean this up here. It's a little untidy. Let me just do this, get all of this out of the way. Just going to do this fresh. Here we go. Okay. So this is the XLK weekly. Made a low back there at 54.25 on the 7th, week of the 7th of July. A, B, C, D, E, F, possible. Okay, and leg C in the monthly chart. All right. So this is going to be a very important phase coming up. Whew. We're going to be watching this one real closely. All right. So we're looking at the Dow right now up 26. S&P's down $1. We'll be right back. Let's see this chart. Yeah, trying to rally. Let's see if we can do that.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So I had a bunch of questions. I think I'm going to deal with them tomorrow and show you how we put it into the context within the Chapman Wave methodology, all of which I'll be teaching in great detail a week from Friday in an all-day session. I do believe that when I give these courses, I spend a lot of time preparing them and a lot of time saying, where are we in the current market, so that whatever I teach is looking forward. It's not, I get ads all the time for techniques in the market, and most of them are look-back periods. Of course, everybody's 2020, you're perfect. It's looking forward. And even though I sometimes use the alternate count, I usually say my preference right now is for this particular one, but you need to know if I'm wrong, what do I do? That's really why I'm an alternate count. If you're wrong, you want to know exactly why and what. Look, if it's still a C in the S&P, E/C, E tells you that if it closes under 2588, it's a 2601, it's almost certainly an E. If it just pulls back a little bit and then holds, it says, nope, there could still be one more rally to a D. And if the technicals are holding, especially if as it is right now, the MACD is just about to cross positive instead of deflecting lower. See, it deflected lower right there back in the week of the 6th of November into the 8th and 9th. And what happened is there was one little quick spike from an F to this G/C, which became a G because it broke down sharply. So now I'm looking at this and I'm saying, okay, I know exactly what to look for. So that's the benefit of having the alternate count. It shouldn't confuse you. It should just say, look, the alternate count is there because if it's wrong, that's what you're looking at. That's all. So a couple of things. So I was asked about the commodity index. So the commodity, let me just go back to this part of the Chapman methodology. We went along back in August at in the 1480s, the DBC, which is the Deutsche Bank, this is the DB Commodity Index Tracking Fund, and it hit 1655 and now it's making a cup formation. All we can do is say, hey, this cup formation invariably tries to retest the left side high at 1655, and the weekly chart is still very strong. All right, Basil Chapman, Tiger Technicians Hour closing up. Stay tuned for Steve Rhodes, and you've got Dave White. You've got Tom O'Brien. Have a great day. I'll be back tomorrow. Check out front page of TF.
It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN. David White's newsletter